Good afternoon. This is Chris Robinson Ag Marketing with today's post-close grain comments and livestock comments. Well, no news on the, people are calling it Trump bunks. I mean, we did this in 2018. I think part of it has to do with the fact that the government's still doing the shutdown. So we'll see. We were promised last week, or shouldn't say promised, we were told last week to expect possibly some information today, Tuesday. We'll see if we get it before the end of the week. The big picture, there are still some estimates out there of what people think the carry out and so on and so forth would be, the expert guesses. Obviously, we're not getting anything from the USDA, so there's nothing to compare them to. But that report will not be coming out here on the 9th. Action in the grains today. A 6 cent range in corn. We finished down 2 cents at 4.19 3/4. November beans finished up 4.25 cents at 10.22. Both those contracts are sitting at their 20-day moving average. If you get a chance to read my letter, I did break down, what would be considered, we're middle of the pack. If you look at all the prices that were available in 2025 for beans, 10.23 is right in the middle of it. So I guess, if you want to be upset about it, I always say it could be worse, right? Anything north of 10.40 puts us in the upper third of available prices. So, to have beans at 10.22 when we were down at 9.70 on those lows, the first tariff news came out, is that 50 cents worth anything to you? I don't know. It depends on your perspective. Some people, we could have, $45 beans and it wouldn't be good enough. But I'm always trying to be glass half full, positive about what's out there. If you're going to be storing beans, for goodness sakes, get a floor under them. You don't want to pay 5 cents a month for storage and then leave the price out there. If you're doing DP or if you're doing something like that, make sure you know exactly what you're doing. You don't want to hem yourself up with any contracts that you're going to be regretting later on. I would positively say that if you're going to be storing grain, we still have a risk. And when there's 50 cents worth of risk here, right, because the contract low is 9.70, we're trading at 10.22, it's 52 cents potentially that we could go lower. Don't spend more than a dime or 12 cents to protect 50 cents. That's what I can tell you. That's a type of math and type of solutions that I go through all the time with my clients when we're looking at what makes sense when we're protecting what's available. With December corn at 4.19, we had an 87 cent trading range so far in 2025. 4.36 would be the middle of the pack. We're at 4.19. Again, we're struggling to get back to even fill the gap from the July 4th weekend, which is at 4.32 3/4. So I'm hopeful that we'll get there, but we're going to need a change in trend here, or certainly a change in the news to really get that going. So if I'm going to be storing corn, same idea. I want to defend. What are we defending against? It's 3.90 corn. 3.90 to 4.20, it's 30 cents. You do not want to be spending a whole lot of money to protect 30 cents worth of risk. That's for darn sure. But that's the risk that we're looking at right now. So if you did nothing, you don't want to be in a situation where we slip lower. So keep some sort of a floor under there. If you've got the grain and you're going to be storing it, there are all kind of strategies we can do where it can be a little bit more aggressive than just buying puts. But I want to wait and see what's actually in the bin. If you don't know what you're going to grow yet, I would still just say make sure you keep a floor under your bushels and see if we look. There is a seasonal trend that people pretty much know about now. It's a big secret. Between now and the next 2 weeks, there's a seasonal trend where sometimes corn rallies just because it's happened in the past 10 or 12 years out of 14 or 15 years. There's no guarantee it's going to happen again, but people look at it. And so if you're looking for something like that, yeah, there's a possibility there. We'll see. I'm very hopeful that we get a rally in corn, but I don't play the game where I tell guys, don't worry about it. Hold my hand. We'll get there. Defend. And hopefully we get some rallies to sell into. December wheat just got hammered today, down 6 cents. Kansas City wheat down 3.5. Chicago December wheat traded at 5.06 at the end of the day. We had a little bit of a bounce last week, but again, the risk is we take out $5. We're going to be looking at wheat with a 4 handle. There's at least 50 cents worth of risk. If you are storing wheat right now, for goodness sakes, get a floor up under it. And if you're looking ahead to 2026, right, July, Chicago is at 550. It's on its lows as well. Would it be nice if we get back to where we were in June when we were at 650? Yeah, but right now we're at the bottom of a dollar slide. We're at the contract low. Is there still potential downside risk? Absolutely. There's 50 cents to $1 worth of risk. And what do I base that on? Just on the old continuation charts. If we get back to where we were, if that contract low fails, that 545 level in July of 2026. So it's not too early to be doing something. You don't want to get caught without some sort of a floor. And again, there are strategies out there that we can talk about if you're looking for help. Give me a call, 312-638-8868. Moving on to the livestock. Just, cattle just powering higher again today. These fat cattle, we had another $2 range there, $2.30 range in these cattle. Finished up $1 on the day, 237 3/4. If you look at that contract, it's kind of hanging out here in no man's land. Are we going to go through 240 and then make a run back at the contract high of 243 and change? First, we got to get through 240, but certainly it's going the way the bulls want it to go. Feeder cattle, with the story out that there's another outbreak of screwworm down in Mexico. Had people spooked again. Remember last week we were told, don't worry, they're going to open the border. Now here we have a new case every day, every week it changes. If the border remains closed, all that product that used to come up from South America, it's still staying out of our supply chain, and that's why it's making the cattle over here more expensive. Continued rumors floating around, nothing substantiated, that there may be some payments coming to try and entice ranchers to hold back their heifers and rebuild the herd. Although you can explain to me how if they cut you a check for whatever amount of money, it's just going to make those animals more expensive. It's going to drive up the value of those animals. And so I don't know how in the near term that may be a situation where the road to hell is paid to good with good intentions, right? So anyway, you cut it, the herd's too small. We know the herd's been too small since COVID. And, I think it's gotten to the point where, it's in the national media. People in Washington, D.C. don't like going out and paying $85 for a ribeye steak, and I think it's enough of a problem now where the whole rest of the world knows about it. And generally, when it corrects, and I don't know when it's going to correct, but generally it's after everybody's kind of had a hissy fit about it. So if you are working with me, you've got a floor in the form of a put. It's very, very dangerous when we're moving around in $5 swings every day in feeders to be used in futures. A $5 move on one contract is $2,500. You put, 10 or 15 on, you're really throwing around a substantial amount of dough. If you're a rancher, you're already long all these animals. So what I would say is defend. Make sure that if and when the elevator shaft, gets opened up and, we have a hard correction, that you've captured some revenue. That's basically been my mantra for the past 10 months, really for the past 4 years. Cattle have been just on a tear since COVID. Now, we've had some nasty corrections, but at the end of the day, this has been one of the biggest bull markets and certainly since the 70s or 80s. So all-time highs there. Now, the problem is if you're running cow-calves and you're going out and you're buying, mama calves now, you're spending a fortune. So what you don't want to be is the person that goes out and spends a fortune on cows, and then somewhere between now and the time you, market those cows or market the babies, cattle's collapsed. So you're making a big downstroke when you're buying these animals. Make sure that you have some sort of floor. And, there's all different kind of strategies out there. If you're working with somebody that can help you, you can kind of custom fit what you're looking at. Some guys just want a disaster put. Some guys want to capture as much revenue as they can. But there's certainly a lot of opportunity right there. And if you're looking at November feeders, 363 was a big level today. It was the top of this wedge. We settled at 364.25. If we take out, I think, 367.60, which is the old contract high, we're going to be talking about, 385, 390 feeder cattle. I know it sounds nuts, but if you want to see something nuts, go pull up a chart since November. We were down at 260. So we've gone from 260 to 360, since last November. So that's about it. Don't want to sound like a beat a dead horse, over and over again, broken record, what have you. The stock market is at its all-time highs. Everybody's constantly worried that, is this the beginning of, some bigger correction? If it does, I can tell you, if the stock market ever does have a hiccup, the first thing they're going to come for will be the cattle. That's just a knee-jerk thing. So when people say, what could turn this cattle? It would be probably sustained lower box beef or cutout prices. That would be number one. Number two would be a bad month or two in the stock market. And remember where we were back in April when we first had the tariff correction. The stock market dropped, about 19-20%. We've since turned around and screamed higher. We're 35 cents from that 35% off that low. So we've had a good correction. But again, if I'm long cattle and I'm worried about, what's out there that could be something that would surprise cattle prices that nobody sees coming, it would definitely be some sort of issue in the stock market. So that's it. This is Chris Robinson. If you get a chance, give me a call, 312-638-8868. Have a good night. Call me if I can help you. Take care.